when we all started this journey of trying to solve the problem of housing, one of the biggest problems that we came across was the issue of developers or construction companies being able to find funding from the commercial banks, especially. And obviously commercial banks basically looking at the business proposition that they have as speculative. In other words, the issue is, if I give you money to build, let me say, 500 units, where is the offtake? Who is going to offtake these properties? How do you repay me my money back? And that has been a major problem in terms of being able to help developers with the ability to source funding, or let me call it patient funding. What we have here is a simple one-pager. It talks about, I think, about providing pre-financing to mortgage member banks to support the offtake needs of developers. What do I mean by that? Now, imagine a developer could come to this institution. You can see the different institutions there. There are 7 of them today. You could come to this institution. You're pre-qualified as a developer. There's going to be a pre-qualification process. You get a letter from this institution basically saying, we agree to offtake, let's say it's 500 houses or units. What does that mean, effectively? It means that you have 7 institutions willing to provide up to 20-year mortgages to the houses being built. Now, I'm hoping that in doing this, that developer can take that letter to a commercial bank and say, if you give me the funding cost, I have the offtake waiting to provide that financing. If we're able to achieve that, I think we're beginning to solve some of the issues that that the last speaker just talked about. And hopefully begin the process of actually providing that offtake and providing the, let me call it the capacity for mortgage banks to actually begin to do the work that they were designed to do. Let me explain what I'm talking about. Mortgage banks, generally speaking, find it very difficult to create deposit liabilities. What I mean by deposit liabilities is the fact that as individuals, in fact, even when my dear brother was speaking, when he talked about the bank, he mentioned GT Bank. Most of us put our monies in commercial banks. Very few people put their monies in mortgage banks. If that's the case, then where is the mortgage bank supposed to get funding to create mortgages? It's a question. Where do they get the money? It's easy for a bank because banks find it, well, relatively easy until TSA to create deposit liabilities. Now, with mortgage banks, it's a lot more difficult. And therefore, it became imperative that we had to create a way within which they can find funding. That was part of the reason for this institution. Because if they don't have the funding to create the mortgages, then the mortgages will not be made available for the Nigerian Mortgage Refinance Company to refinance. And then you'd have a problem. So we had to actually bridge that gap. And so by doing that, we've created 2 things. One is to increase the capacity of mortgage banks and essentially make sure that they can actually do what they want to do by providing them the funding they need to do it. And in doing that, also give developers that offtake ability, or give the offtake to the developers to build the homes. So those are the 2 key things that we're trying to achieve. And I look forward to the question and answer session to clarify most of that, but that gives a very good overview, hopefully, of what this institution is all about. It is there to basically provide short-term funding to mortgage banks. That money will be used to create a mortgage. And in creating that mortgage, that money has gone somewhere. Where? To the person who sold the house, most likely a developer. And that money is then gone to pay off the financier who funded the construction. So you begin to create an ecosystem that operates and works. the whole idea, effectively, is you have the vehicle, which is mortgage warehouse. This vehicle there basically issues what you call commercial papers or asset-backed commercial papers to investors like the pension funds. That cash is then on lent to the banks here, which are basically mortgage banks, to create mortgages for individuals. And that's effectively what happens stage one. So issuance of commercial paper, short term, to investors. Investors then buy that, and then the monies are used to on lend to the banks for them to create the mortgage. I talked there about the fact that as that mortgage is being created, NMRC also receives that information, right? So that they receive the mortgage pool information at the point of, or actually to refinancing, to commence the pre-qualification for refinancing later on.